Hi everybody, this is Bob Iacchino from Path Trading Partners along with Mike Arnold as always with a morning Path chat. This is our normal scheduled time for an equity update. We're going to mix crude oil in this one because it's the only commodity that we're going to be doing a morning update on for today. It's the only one that kind of seems interesting. So talking specifically about crude oil, you have OPEC releasing a demand forecast saying that 2017's demand is going to exceed the average year's demand. So OPEC putting out a forecast that, of course, falls in line with what they want to happen, and that's higher prices, and crude oil is selling off. Also going to be covering the NASDAQ, as well as the Dow Jones Transports, and the S&P. Michael will be reviewing those on the charts. Interesting week. I went over the week ahead in our FX Path chat, our weekend preview for FX, but also I wanted to point out that the importance of Janet Yellen's testimony to Congress and to the Senate, House Banking Committee and Senate Finance Committee, Tuesday and Wednesday. She'll have a pre-prepared speech as well as Q&A sessions, in which case she may be more hawkish in her pre-prepared speech, potentially, given the comments by some of the Fed governors about balance sheet reduction that we've seen over the last couple of weeks. Also, you will have Republican congressional members grilling her on that balance sheet reduction and what the effect could be, and on strong dollar policy. You'll have Democratic congressional members grilling her on Trump policies, trying to get her to be negative toward those policies. And then you'll have Trump tweeting at any of the above, which is a complete wild card. I point you to an article that we wrote, that we put out. It's on pathtradingpartners.com. It's also on our Twitter and our Facebook. Take a look at that article for more details on what could happen with the Yellen speech. And prior to the Yellen speech, we'll have CPI coming out, which is extremely important to the Fed because that's what they base rates off of. They base rates off of inflation and unemployment. So I'm going to turn it over to Mike now to take a look at what he's seeing on the charts, because the charts are really all that matter to us.
Okay, thanks, Bob. Here's our daily crude chart. Critical line in the sand, 54.21 level. We're watching for a close above that on a daily basis, and then we have our projected GAN levels higher. Nothing to really talk about until we get that close above there. If we continue to pull back, we're right at these flat moving averages right now. Further pullback can target the 52 level, and we have this rising trend line. We've been in this consolidation period for a very long time, so when we do break out of it, we are going to have probably a pretty quick move. Let me look at some equities now. Here we have the VIX. Keep in mind we're very low VIX, right? We're at 11. We were down last week in the 10s. 10s and 11s are very low, and there's a lot of complacency in this market. Combining that with what Bob was talking about, we can see sudden and sharp moves. NASDAQ, we are still in this major rising wedge. If it continues higher, watch for resistance around the upper wedge channel. Okay, I mean, right now, it's going to keep rising every day, but right now it's 52.65. It could go into even the 5,300. If we get a close below the support channel line, then that's what we're going to be watching for to trigger the wedge, with the first target being the rising 21 exponential, second target being the rising lower channel line. And then if we continue lower, then you have the rising 50-period exponential. On the S&P, we've been hitting some of the targets higher, so we're just going to keep watching for that. We have some other targets. The next major one now, we've already passed our 23.17. Next one is 23.23, followed by 23.29 are the next targets higher. Nothing else to really watch for on there. On the Dow Jones, on the Dow, we have, let me put this on a weekly basis. We are in another wedge pattern on the week. Right now, the highs of this upper channel, should we keep rising, are about 24.25, 2400, 24.25. We'd need a close below this rising support channel line, which is also a valid trend line, which would also come in nicely with the 21 exponential moving average for us to target another rising trend line and the lower channel line and the 50 all moving in parallel, very close together. So keep an eye on that. Finally, in the transports, we talked about this. This is now getting sloppier on the right-hand side. If we were to get a move this week, it's still a potentially valid double top. Watch for, if we do target last week's close around 94.45 or last week's high around 95.02, this is then going to be in triple top territory and invalid. There may still be horizontal channel trades off it or trend line trades should we break down, but it will not trade precisely like a double. So that's your targets on that to watch for. And again, for this to trigger, we'd have to get a close below the 89.8034 level for it to trigger as a double. So that's our update this week, at the beginning of this week, on equities and crude. Back to you, Bob.
Thank you, Michael. New Money Path podcast was released Saturday afternoon. Go to our website, pathtradingpartners.com. Go to our Twitter. You could find it there as well. Just go into the search bar, type in Path Trading Partners, or go to iTunes and type in The Money Path Podcast. It is called The Money Path Podcast. Please subscribe to that. Follow us on Twitter so you can get these updates as well when they're released. And check out our YouTube channel, obviously, pathtradingpartners.com. Thanks, guys, for watching. Cheers, everybody. Have a good day.